Hi, it's Bernadette again with By the Book Accounting with a quick video again. Today I'm talking about the advantages and disadvantages of partnerships. So, by definition, a partnership is a collaborative effort between two or more people. Gotta have two people to have a partnership, okay? At least two people. And it's basically when you all come together to own and manage a business for profit. That's by definition, that's what a partnership is. So let's talk about some of the advantages of a partnership. So some of the advantages of a partnership is that you can have unlimited ownership. So having unlimited partners means that you have access to more resources, more capital, more expertise, more people to share in the load. So that's one of the advantages of a partnership because you can have access to skills that maybe you don't have, or access to capital or contacts that you don't have. And so that's one of the advantages of a partnership. Also, something else, an advantage of a partnership is that if you do it right, when you form your partnership, it's pretty clear up front how the business is going to be run. So I recommend anyone who is considering a partnership, make sure that you speak with an attorney. Because when you have an attorney actually draw up your partnership agreement, it's really clear on how you're going to operate the business, how you're going to manage your profits, how you're going to split the profits, how you'll handle disputes if they come up, or how will you make complicated decisions, how will you add partners, how will you get rid of partners, what happens when you decide that you want to dissolve the business. So the partnership agreement, it's all, those are things that are done in the beginning. And again, if you do it with an attorney, it makes it, that's one of the advantages because it's really clear. There's no question, there's no guessing, there's no making it up as you go along. So now, on the flip side, the disadvantages to a partnership are pretty much the same as the advantages, because sometimes having unlimited partners can be a disadvantage because you can't get anything done because you got too many alpha male or females, whatever the case may be, too many people that want to be in charge, or too many ideas. So you can see how having multiple partners can be an advantage and a disadvantage. You've all heard the saying, too many cooks spoil the soup, and sometimes that happens in business too. So that's a disadvantage of partnerships. Another disadvantage of partnerships is the unlimited personal liability. Just like a sole proprietorship, as partners in a business, your personal assets can be at risk when you have a partnership because you're an unincorporated business. If anything happens, your personal assets can be at risk. The other thing is that because you have partners, your partners can put you in a situation that you don't want to be in. And so your partners can sign on behalf of a partnership and maybe put you in a contract that you don't want to be a part of, or maybe even a loan or something like that. And so, excuse me, those are some of the disadvantages to partnerships. Then also there's a disadvantage from a tax standpoint, because as a partnership, partnerships are treated as what we call pass-through taxation. And it's very similar, the tax treatment is very similar to that of a sole proprietorship. The difference is a partnership files a separate tax return. So that separate tax return, it's a 1065, it's a partnership return. This return is filed, and it's like an information return. It lets the IRS know how much money the partnership made, how much the partnership spent in business expenses, who the owners are, and what their share of that profit is. And so if you have a partnership with two people and you're 50-50 owners, the two of you will split the profits and claim those profits on your personal tax return. Now those profits are now subject to what I've referred to in a previous video as a triple tax, because you are going to pay federal income taxes. If you live in a state that has state income taxes, you'll pay state income taxes and Social Security and Medicare. So partnerships can be tricky, ideal for some situations, but not all situations. So let me give you a few types of businesses that I recommend partnerships for. Family business, so husband and wife, brothers, sisters, best friends, whatever. Those kind of businesses, sometimes partnerships are the best way to go. If you own real estate, like if you are maybe in renting out real estate or things like that, real estate is a good business for partnerships. Also, when you're talking about bringing together complementary skills, and so if you have a partner that's really good in accounting and you're really good at marketing, and together you guys work well together, so a partnership is ideal in a situation like that because you bring together complementary skills. So in closing, partnerships are some of the how do I want to say it? They survive the least. These are the first businesses to die. Partnerships, because they're hard. A partnership is a lot like marriage. It's a lot of work, and you have to make sure and be very sure that you're in business with the right person. Because you can have a great idea, but if you are in business with the wrong person, just like a marriage, you could be a great person, but if you're in a marriage with the wrong person, it can turn out not so well. So just because you've been friends for 20 years doesn't necessarily mean that they're going to make a good business partner. So choose wisely when you are considering partnerships. And I hope this video was helpful for you. Let me know. Thanks.